Hey, today we're discussing the Fed cut rates. Let's start with the basics. The Federal Reserve, or the Fed, is basically the central bank of the United States. One of its main jobs is to set the federal funds rate, which is the interest rate banks charge each other to borrow money overnight. This rate doesn't directly set your mortgage rate, but it has a huge influence on the overall economy and, by extension, the rates you see when you go to buy a home. Just days ago, the Fed announced a quarter-point rate cut, bringing the federal funds rate down to a range of 4% to 4.25%. This is the first cut we've seen since December of 24, 9 months. And it's a big deal because it signals that the Fed is trying to give the economy a little boost, especially as we've seen the job growth slow down and inflation remain a bit stubborn. You may be asking, does this mean my neighbor's house in French Valley is suddenly worth more? Well, it doesn't instantly boost your home's value. It does make borrowing cheaper, and that means more buyers can afford homes in our area. Whether it's a horse property in Winchester or a cozy spot near Lake Elsinore Marina. Let's be honest, we all remember last year when rates were pushing 7%, and buyers were hesitating. Now with rates dipping into the low sixes, I'm already seeing more folks at open houses, just like the one we had last weekend in Wolf Creek. Now, if you're wondering if it's time to buy that vineyard property in Temecula, the answer is you bet. Right now, the average 30-year fixed mortgage in California is down to 6.15 to 6.35%. That is money saved for a few extra bottles at Wilson Creek or a family dinner at the Goat and Vine. Now, if you're a first-time buyer wondering, hey, is it really that much easier now? Absolutely. Let me give you a real example. Let's take last month for an example. If a young family from Menifee was looking at homes in Red Hawk, with the new rates, they qualify for $30,000 more in purchasing power, enough to get that extra bedroom or for that growing family. And with every 0.25% drop, you're saving about $66 a month. On a $400,000 loan, that's a year's worth of soccer fees at Birdsall Sports Park. Now, if you're asking if the rate cut is going to help homes sell quicker, it sure helps. Lower rates mean more buyers are out there, and that's exactly what will happen. This market is buzzing, especially in communities like Wolf Creek and French Valley. If you're thinking of selling, now is a great time to catch this new wave of buyers entering the market based on the savings and during the holidays. How about the other communities that offer lakes like Lake Elsinore? How's the market looking for you? Well, Lake Elsinore has seen a lot of interest, especially from folks who want more space and love the outdoors. I just toured several homes in Lake Elsinore, to including Laguna Point by D.R. Horton, which opened just a couple weeks ago. And they're actually even offering 4.99% financing. Many of these homes offer big backyards, enough for a boat and a garden, something you don't find in LA. Across the valley, we're seeing balanced market, enough homes for buyers to have choices, but not so many sellers that are losing their edge. Prices are stable, and a well-priced home in neighborhoods like Morgan Hill, French Valley are still moving quickly. Now, if you're wondering if you should wait for the rates to drop even more, that's the big question. Experts are whispering about rates dipping below 6 later this year, but nothing's guaranteed. If you find a home you love and you can afford the payment, it often makes more sense to move forward now. Remember, you can always refinance. If rates drop further, but you can't rewind if prices or competition go up. I've seen buyers in Temecula lose out on their dream home because they waited just a little bit too long, hoping to time the rates. Now, what if you're looking to invest in this area? Is it a good time for rentals or second home? Well, with rates dropping, rental properties and second homes are looking more attractive. The demand for rentals is strong, especially with all the folks moving here for our schools and quality of life. Now let's put some real numbers to these rate changes. Here's what a lower rate can do for your loan amount. A 0.25% rate drop, you're looking at on a $400,000 loan, you're looking at $66 a month savings. At a 0.5% rate drop, that's $132. If your home price is in the $800,000 range, you're looking at $130 a month or $264 a month. That's money back in your pocket every single month. Enough for a few more wine tastings, a round of golf at Red Hawk, or family day at Lake Skinner. So let's get to the bottom line. Temecula Valley, whether you're buying, selling, or just thinking about your options, now is the time to get your game plan together. Buyers, my advice to you is to get approved now. Know your numbers and be ready to act when you find the right home. Sellers, start prepping your home, talk to local experts, and take advantage of increased buyer demand. Investors with rates dropping, rental properties and second homes are looking more attractive as well. And remember, the Temecula Valley isn't just a place to live, it's a lifestyle. From wine country weekends to top-rated schools and vibrant communities, there's a reason so many people are making the move here. Everything I've shared today comes straight from the latest Federal Reserve statement, Forbes, Bankrate, and my own experience working with buyers and sellers right here in the Valley. I'm always staying on top of the latest trends so you don't have to. I hope you found this video helpful. Let's keep the conversation going. Drop your questions in the comments. Don't forget to like and subscribe and share this update with anyone who you know who's thinking about making a move in the Temecula Valley or Southern California. Thanks for joining. And remember, in real estate, timing is everything. We'll see you the next time.